Hi traders, the US dollar finally, it's official. We have a corrective phase. Very strong at the end of last year, leading into Trump coming in at the start of this year for his election and his changes that he's making. But we are seeing a corrective phase. So we've seen a lower top and bottom form technically on the US dollar index on the daily, as well as another lower top and another lower bottom. So we're in effect seeing a corrective trend forming. What I was waiting for was a lower top and bottom on the weekly chart to match that daily, and we now have that. Officially, we have a lower top forming on this US dollar index and now this lower bottom. So the longer term trend on the US dollar is up. So the question traders might be asking is, okay, how long is this going to correct for, or how deep a correction are we going to see? So what do we look at? Well, I'm going to show you today the data I've been watching, the news releases, this economic sentiment that we're getting from various data points and news releases coming out over the last week, and what I'll be looking for the rest of this week. So what I mean by this is it gives us momentum or a sentiment of the market, meaning if we are in a corrective phase, if the data starts to come out a bit weaker or more consistently mixed, could we see a deeper correction? So it allows the traders to decide which way their bias might be. Because the reality is, if the longer term trend is up and we have a pullback, at some point this longer term trend could continue. So you've got to go back to buying US dollars. But right now we're not sure. Right now we're seeing lower tops and bottoms, especially on the weekly. So we're trying to gauge, how do I judge the tide of the market or the momentum of the market? So using the data, let's have a look at last week. So the first forward-thinking guidance came from the US on the PMI. So we had the PMIs come out and we got some really weak PMI data on the services sector. So it came out at 49.1. Now at 50 and above, you're expanding, it's still growing. But at 49.1, the services sector is actually contracting. So that's a very weak sign. And the other thing we're seeing is it's a forward guidance thing. So our own analyst here, Peter Pan, he was talking about because the purchasing managers may be affected by the uncertainty perhaps of tariffs, so their expectation or their confidence is starting to look a bit weak or uncertain. That in itself provides some an argument to suggest we might be getting a weaker US economy, and as a result, we might get a deeper correction in this US dollar in line with its current trend. So the other data came out, of course, was the consumer sentiment. So consumer sentiment dropped all the way down to 64.7. So it missed the target. So you've got consumers, you've got purchasing managers, all a bit weaker. And of course, that was followed by the Philly Fed Manufacturing Index, again, missing the mark. And most importantly, the home sales, right? So we're looking at the existing home sales have dropped all the way down to 4.08 million. So we've got a situation where consumers are starting to see the market as being weak. We've got the purchasing managers seeing the market from big companies as being weak. And we've got home sales effectively falling off a cliff at the same time. Are we going to see a further correction, therefore, in this US dollar? So this week is a little bit lighter on data, so I'm going to use, rather than picking one particular news event, I'm going to look at the overall, okay, for the end of this week. And these are the US things I'm going to be looking at. I'm going to be looking at the consumer confidence, the new home sales, we've got GDP, we've got durable goods, and we've got home sales following up, right? The big finale is going to be the inflation data coming out on the Fed's personal favorite, which is the core PCE inflation data. So all of that is yet to come this week. If we continue a trend here of seeing negative data on the US economy, I feel like we therefore could have a bias using that as a tide to gauge whether or not we could get a far deeper correction in this US dollar. So folks, keep in mind, a weakening US dollar in this corrective phase could provide some trading opportunities. So for example, on gold, gold at the moment is at a daily resistance level. It's consolidating. It certainly isn't changing its trend to the downside, but a continuing weakening US dollar, we could see a breakout well into that 3,000 range. And stocks, I mean, if we're starting to see bond yields continue to fall, which we are seeing at the moment, we have got a correction in the stock market. But keep in mind, this correction at the moment is well inside the range in an uptrend. So this could provide some support and buying opportunities down at the bottom of this consolidating range on the NASDAQ, on the S&P 500, and of course the Dow Jones Index. Even though it mightn't look like a super exciting week, we're using it to gauge the momentum and strength of this current correction and this current downtrend. Get your data points, line them up, get your technicals, notice the correction, and therefore combining the two, we can create a bias.